hello everyone who's watching. Welcome to this really power-packed session that we have. We are going to be with you for 50 minutes, so plenty of time to figure out the problems afflicting blockchain land. Now, my panelists really don't need any introduction, but I'm going to try anyway. But first, I'll tell you who I am. My name is Julian Wong. I'm a partner at Amplified Event Strategy. We help teams craft the narrative that they want to convey through gatherings, through events. You may have seen some of my work before this at Quartz and CoinDesk. I've been covering the space for some time, since 2013. And I helped to start the Consensus Conference that everybody enjoys every year in New York. So that's me. Let me start with Jamie, who's on my left here on my Zoom. Jamie is with Outlier Ventures. You've made a lot of notable investments. You're based in the UK, in London. Anything else you want to add to that brief intro, Jamie, before I move on?
I think that's pretty much it. Been investing in blockchain, crypto, Web3 for over 7 years. And now we are an accelerator. So we work with 30 pre-seed startups every year, increasingly in things like DeFi and NFTs.
Yes, and I hear that we will be in for some alpha leaks from Jamie throughout the course of this session. Next, we have Roham, who was the CEO of Dapper Labs, and Dapper, of course, kickstarted the CryptoKitties boom, which was really, I think, the first time we saw lots of network congestion on Ethereum, and it was an exciting moment for lots of people watching the space at the time. Anything else you want to add on to that, Roham?
Yeah, I mean, I would say that, since then, for the past 2 years, we've been trying to figure out how crypto can go mainstream. And I think we figured it out. So anyone who's watching who hasn't tried NBA Top Shot and hasn't experienced Flow for the first time, make sure to go to discord.gg/NBA Top Shot. Tell them I sent you, and they'll get you in. There's still a wait list, but we're now letting people jump in quickly. So it's really exciting to be here. Thank you so much, everybody, for joining.
Wonderful. And last but not least, we have Sergey Nazarov, the co-founder of Chainlink. And if you've been paying any attention at all, Chainlink seems to be everywhere in crypto and DeFi these days. Hello, Sergey. Anything else you'd like to add to that?
Yep. Hi. Thanks for having me on the panel. I mean, from our point of view, we're really here to enable the creation of all these kinds of NFTs, provably fair gaming products, enable the creation of collateral into DeFi, all these types of things that end up creating the underpinning economic systems and guarantees that make these new forms of value useful to people, right? So I think that's kind of the role we seek to play in all this, and I'm really excited to see amazing teams like Dapper Labs and others building these next generation types of products, and getting those products built really does move the space forward. And so our goal is just to support the creation of those products however we can, in whatever model, with whatever collection of inputs, whether that's randomness or external, whatever we can do to help, basically.
Very cool. I thought just before we dive into some of these more specific topics that we've prepared, I thought we'd do a little icebreaker. It's been a long summer, it's been a long year, even though it's only September. And I was wondering, for each of our panelists, what's the one thing in the blockchain space that sort of took you by surprise over this summer? And maybe I'll start with Jamie.
Well, I guess on topic, NFTs, to be blunt. So I took a family vacation, managed to get out of the UK to Greece and back into the UK, which was a miracle in and of itself, without COVID. And of course, I'm not very good at switching off on holiday. So I thought, well, I'll look into something that doesn't feel like work, but is that I'm interested in. So I ended up kind of checking out NFTs, mainly digital art, and was just blown away. I think it's probably been a couple of years since I last properly looked at the space, and just the level of sophistication, the volume of different types of NFT. I mean, just even within digital art itself, the platforms that have popped up, so that's taken me by surprise. And then, so I started kind of tweeting about it really just as I was forming a thesis in my head. And just even over that period, like the last 4-6 weeks, where I were buying bits of art for like maybe $250, they're now like $2,000. And last night I spent $5,000 on a piece of art, which I didn't intend to do. But I just think it's an amazingly fascinating space and very fast moving, even for crypto.
Yeah, we'll definitely come back and dive much deeper into NFTs and the notion of art NFTs in a minute. Roham, I don't know if you want to take a stab.
Yeah, for sure. I'll take the opposite side of that seesaw. And we've been in NFTs for a very long time. We've been seeing sort of the excitement of, I mean, CryptoKitties we've kept it small, but I'm a full believer there. But honestly, the thing that caught me by surprise is the progress on DeFi, how fast things have moved, but B, how sort of skeptical and salty some people are that aren't even trying these products. I mean, I think as a geek, as a developer, I think it's so cool that people can, individual developers can build software that then handles billions of dollars of value, just plugging in pieces from different developers and different businesses. And honestly, I'm a little surprised that, I mean, it's been Dapper Labs' whole thesis that you need to kind of simplify things and let people sort of hold on to something tangible for them to kind of understand the open world that we're building. But as someone who uses all of these tools, it's a little magical to sort of my crypto wallet. I go to different banks and they all know who I am, and I can access my money from all of them, and I can do all kinds of operations between them, and nobody can sort of tell me otherwise. I think that's incredibly powerful. So I was both surprised at the speed of development and at maybe how I think closed-minded some folks in crypto are being about the potential. There are for sure scams, of course, and that's unfortunate, but I think we're seeing a little bit of magic happening here.
It's kind of like the return of NFTs, and then immediately the backlash against the return of NFTs is happening like within days or weeks. I'm going to move over to Sergey now. How was your summer, Sergey? It must have been a busy one. What was a surprise to you in the space?
Yeah, busy summer. Basically, my isometric bubble here, it's a very nice bubble. It's all kind of very, very planned out and structured. I think I have to echo, some of the things Roham said, where I think the growth in DeFi has been something I've been waiting for many years, and I'm truly, truly excited to see it. And I think the people that are driving this forward, like Joon, Andre at Joon, Kane and Justin at Synthetics, and Stani at Aave, like the people that have been able to get this off the ground, I've been really impressed by them. And so the amount of value they've been able to get into these systems, the way they manage their communities, the way that they're able to compose all these different pieces together and build products that are superior to traditional financial system products. They generate better yield, they have better transparency, what the underlying collateral is, things about solvency. Obviously, there are a few kinks here and there and a few risks and a few people that try to take advantage of something related to a new wave of innovation. But the reality is that, this is something I think that people who have been in this space for a number of years have been waiting for. So they've been waiting for a certain composability, a certain kind of composability that enables people to truly build these kind of next generation contracts in a community driven way with certain security built in. And I think we're kind of at the beginning of that. So I feel that as long as the security can be built in by really competent kind of infrastructure teams, and then the composable Lego building blocks can be provided to developers so that they can combine them the way they're used to combining services, right? And the security concerns of combining those services can be properly managed, then you can continue to see, things like Joon, Synthetics, and Aave have communities that rapidly generate not only kind of feature parity products for the financial world, but also entirely new categories of financial products that the traditional financial world, won't be able to catch up with, right? And then that'll force them into this same model. of interacting with infrastructure in this kind of fast-paced but still secure and more transparent model. And so I think that that evolution over the summer has been just unbelievably exciting and driving me and everybody on our team to just kind of stay up late and make sure we can do everything we can to do anything we can to basically help make sure that the security and that the dynamic continues. So that's very exciting for me, and I'm very grateful to all the people doing that they're in this space, kind of building the next generation of what this space is about. That for me this summer has been like amazingly cool, despite all the crazy stuff you see when you look out the window. But other than that, it's been really cool.
Yeah, certainly some themes here among all three of your sort of observations. So Jamie was interested in the re-emergence of the art NFT market, and some things seem to have changed, I think, in the broader crypto space to allow that to come back potentially stronger than before. I think 2017 might have been sort of like the first wave, right? And then Roham, sort of the return of NFTs in gaming and so on, and then also sort of the response of the market to this return, and composability, right? And then Sergey, just the speed of DeFi and how composability actually enables that speed to take place, since a lot of those pieces have been built in parallel over the years, and then suddenly we hit this tipping point this summer where they all sort of interoperate and are put together in very interesting ways, like Yearn. So I think certainly I echo those observations. It's been a crazy few months. I thought we could structure this conversation for those of you who are watching in the following way. We've got 5 broad themes. We're going to spend probably the most time talking about NFTs. And then we can talk about another thing that seems to be trending now, which is this link between creators and their communities. So this notion of, that's expressed by a notion of personal tokens or tokenized newsletters or tokenized communities, which I think we're seeing trending now. And then, we have a bit more time to talk about things that's sort of plaguing many projects in the space, things like scaling on Ethereum, things like governance and so on, as well as the broader question of just user adoption, right? How do we get more people using some of these cool things? So that's the roadmap. Maybe we should start with NFTs. I'm looking at a chart that Messari put together that's really interesting. And I think a lot of you on Twitter have seen this floating around as well. And it's a chart that shows the volume, the trading volume on 3 different NFT marketplaces, right? So Super Rare, OpenSea, and Rarible. And if you go look at that chart, you'll see that the Rarible volume just explodes, like in September. And I think it's at 4.5 million for the month of September. And compared to 1 million the previous month, August. So clearly something is going on here in terms of NFT activity. And I guess the question I want to start with is, what do you guys think is going on? Why is there so much interest in NFTs all of a sudden? Maybe I'll go to Roham here, since you've been in NFTs for a long time.
Well, I think it's been building up for a while. Even if you look at sort of 2019 numbers, the dollars in DeFi are orders of magnitude bigger, but the number of people in NFTs, at least in 2019, were still orders of magnitude bigger. I mean, CryptoKitties has had 6,000 MAU all through that year, and that's without introduction of new Gen Zeros or anything like that. And I'm pretty sure that's significant compared to most DeFi products. The gas fees kind of killed the NFT action for a while, because I mean, when just sending a thing, and remember, sending NFTs back and forth costs more than sending fungible tokens on Ethereum. And so when sending a thing costs several dollars, and you're not speculating on anything, you're not margin trading, you're not going to make $1 million off of an NFT sale. It's sort of fun first and foremost, social expression and interaction with others second, and money is sort of the byproduct. And so high gas fees basically kill all activity on any of these networks. Artists can't even afford to mint the tokens, et cetera. And so right after the kind of DeFi respite, in a way, we got, gas fees are fine now. And Rarible did their sort of liquidity mining program where they're distributing the Rarible tokens. Most of their users went ahead and turned those Rarible tokens into more NFTs, which is really cool to see. And so that just pumped some excitement and liquidity in. But in general, I think it's more people just discovering the same ideas that have been going on for a while. And we just NFTs are such a more accessible way to interact with digital scarcity and sort of true ownership and open platforms, building things that are sort of visible to others, no matter what interface they're using. Sort of the network is accessible to everyone. That all of these concepts that make crypto cool, I think, are much more accessible in NFTs because you don't have to have big piles of money to essentially for it to make sense. And even if you're break even, it's a lot of fun. If you end up making money, it's great. If you end up investing more in the art and actually come out with less ETH but more collectibles, you're also happy. So I think it's just a question of more people discovering the excitement, gas fees going down, and letting people get sort of let them play around with it. But I still think it's super early days. The volumes are still low compared to DeFi. And really what you want to see is that composability starting to compound, which you won't until the platforms can handle a greater level of scale. And there's simply more people because the dollars are lower. So that's my perspective. It's sort of the volume's always been there in terms of number of individuals. And sort of you're seeing some catalysts that are causing a resurgence. I mean, I will say though, like projects like Meme are just new and they're cool and they're different, and that's also getting people excited, which is great to see.
Yeah, I mean, this is the paradox of building things on Ethereum, right? Or really any blockchain where you have the inverse relationship between gas fees and the ability to do fun stuff for things that are non-financial in nature, like trading and sending NFTs back and forth, and that's why we'll talk about scaling in a little bit, I think. So Jamie, you have a whole thesis you were mentioning around DeFi and NFTs. Maybe tell us that, as well as why you think NFTs are, there's so much volume and interest in it right now.
Yeah, well, I mean, there's a number of different ways to look at NFTs because, of course, the ways that they can be used are almost unlimited, whether it's loyalty points, digital art, collectibles, access tokens. I mean, really, it's a huge range of different use cases. But I think in the context of DeFi, when you look at innovations such as Gharegozlou, which effectively is a game now built on top of Aave, which effectively brings about a form of loyalty. If you think about what was wrong with DeFi, and I'm actually drawing a distinction between the DeFi that we've just seen and what's about to come, because the DeFi that we've just seen really was driven by this innovation of what is pretty much digital equity, right? It has governance rights and it has yield. And so there's no escaping that sounds a lot like equity. That doesn't necessarily mean long-term it'll be treated that way, but those are kind of the characteristics of it. However, what that led to is a lot of promiscuous behavior. So the DNA of DeFi for me, if I kind of grossly simplify it, is this system is just aggressively hunting for yield and efficiency, and of course trying to find an equilibrium between those two things. And so, the minute that you create effectively subsidized form of marketing to acquire users, to acquire utility, you can subsidize that through yield, either by effectively losing money or kind of artificially creating yield, or ideally you have some form of genuine revenue that comes in. And the reality is in a lot of DeFi that revenue wasn't there yet. So effectively you had this system which was aggressively as a whole, aggressively looking for yield, at the same time looking to remove efficiencies like fees. So you have this very kind of promiscuous behavior, liquidity just hopping from protocol to protocol. And so I think what closes that loop, so rather than just acquiring liquidity, NFTs can be used in a loyalty context. So effectively, you can bring about a game of loyalty for behaviors that you want to see to kind of lock people into a protocol, or at least incentivize them to stay there. So Gharegozlou is a really good example of the direction I think this is going, where DeFi begins to leverage these loyalty characteristics that you can build from rewards, collectibles, and what have you via NFTs.
So you see some like recursion between some of the DeFi strategies, the yield farming type stuff, and then sort of tacked onto this to gaming, blockchain gaming, and collectibles, right?
Yeah, and vice versa, actually. So if you look at the people that are coming into the NFT space, a lot of them, as Roham was saying, they might be totally new to crypto, right? The non-fungible is just much more easy to understand, especially when it's a collectible or a gaming card or a piece of art. And if you look at these platforms that they're coming through, they're equivalent to like a Binance, a decentralized exchange or a centralized exchange that is bringing retail adoption in, so effectively serving as a distribution channel for NFTs. So that's bringing a whole new class of demand into the system. And these people are going to increasingly start to leverage this DeFi infrastructure. So if you look at Whale Shark, for example, who's a very big collector in the NFT space, gaming cards and digital art, he's effectively got this massive collection of NFTs. He's minted his own token, which is one-to-one to that collection. But you could imagine a number of other people effectively borrowing against the collateral that are NFTs, and then buying more, kind of bootstrapping a collection. So I think there's this interesting interplay where NFTs fix a lot of structural problems in the DeFi market, and at the same time, you're going to have the NFT space leveraging a lot of this infrastructure, certainly around borrowing and lending, that's come through from DeFi. And so I kind of, in this thesis that we put out today, I argue that the combination of these two things is what's going to kickstart a mega bull run. The limiting factor, of course, is, as we say, the kind of the fees and various things at a network level. But once they're removed, either by ETH2 or cross-chain interoperability with Cosmos and Polkadot, or Dapper Labs, or Fuse and whoever it might be, probably a combination of those things, we are going to have a huge rush of retail users, not necessarily retail investors, but retail users that would have never bought a token on Binance, right? They would have never considered buying a fungible token. And I kind of think that could very easily be 3 times the size of the ICO wave that hit us in 2017 when it really takes effect.
Mm-hmm. So yeah, these sort of non-financial users of crypto tokens. I'm going to move over to Sergey now. So Sergey, you obviously look across lots of different sectors, right? And NFTs is just one of them. I wonder if you can tell us a little bit about how Chainlink sort of is involved in the NFT space. I understand there's a couple of ways, right? There's dynamic NFTs that is generated by real world events or influenced by real world events. And then you also have a randomness, module within Chainlink that can be applied to NFTs as well. So if you want to walk us through that.
Yeah, sure. Glad to do that. I'll just quickly comment on part of the earlier question you had for folks, and then that'll tie into how we add some of this value at the end, if that makes sense. So I think when I look at the NFT space, I kind of see a parallel with the art world first, and the fact that there's a lot of gaming origins in our space basically means a lot of people are interested in it. The next thing that I see is that, kind of what Jamie said about the flow between collateral and NFTs, that line is becoming more blurred, and that's driving dynamics that basically give people a reason to acquire NFTs because now they have a use value beyond just I have an NFT. It's now a use value in the collateral sphere, right? That on top of the fundamental value of NFT as like a art object or from the gaming world. And then the third dynamic that I think has kicked off a lot of this is that there's NFT tradability now. So you have liquidity, which minimizes people's risks, right? So people can get into NFTs, they can get out of NFTs. When they get in, they can get it used in collateral, they can get returns on it. So kind of the value proposition of NFTs has definitely increased. The role that we kind of play in all this is we seek to bolster the guarantees of NFTs. We seek to make sure that the NFTs that people use actually have certain reliability built into them. So I'll give you an example. Today, Aavegotchi, the NFT platform that Jamie mentioned, announced with us that they're using something called Chainlink VRF, the VRF solution. And what the VRF solution will do is it'll enable people to randomly, to have assurance that the NFT object, which is supposed to be valuable because it's scarce and because it's generated in a fair way, is actually going to have that scarcity. Basically, it's going to have the scarcity of the unique properties being distributed across a certain set of NFTs, right? Because you can randomly generate these NFTs, the properties of the NFTs, and you don't want, nobody wants to participate in a distribution that's unfair, basically. Nobody wants to participate in, I'm gonna go acquire a certain set of paintings, but I'm only gonna get the worst paintings, right? And I'm gonna get the really low value paintings, and the 5 high value paintings are gonna go to the team in a back room somewhere, and nobody's gonna be able to prove otherwise, but the team's gonna get it. Like people, the game there is kind of rigged, and that's antithetical to what blockchains and these systems are seeking to provide. So the role that we have in all of this is kind of an enabling factor for people to be able to guarantee the fairness or the underlying value of their NFTs through something like Chainlink VRF, which is used to make sure that like something like the McDonald's scam doesn't happen in the blockchain world. Basically, in the McDonald's scam, I think there was millions and millions of dollars stolen from this McDonald's game. A lot of us might have played as a kid, where it's the Monopoly game, and you get a thing, and you might win some money or something. And apparently, that was gamed, right? And so you want these NFTs to be generated in a provably fair way. You also need them to be generated in a scalable way. So that's where another piece of the infrastructure comes in, where you need a chain. Such as Flow, such as any number of other systems that kind of allow us to generate scalable but provably fair NFTs. And then the other things that we provide to the space are really around the provision of external data. So NFTs, if they're not in gaming, they're sometimes in these tradable units. And if the tradable units need to represent something like a real estate asset or some other asset off chain, then you basically need oracles to inform a contract about the state of that asset, right? And that's basically the nature of that collateral being turned into a valuable NFT, is that it can be updated with its underlying value, so that the underlying value doesn't separate from the NFT. And the oracles once again end up bolstering and making sure that the NFT that you're dealing with does have the underlying value that it's proposing to have. And so that I think is going to be an increasingly important factor, especially as the value in the NFTs grows, because these types of guarantees around the security and the verifiability of the value in a system, they tend to grow as the value secured by a system grows. I mean, we've already experienced that in DeFi, where a lot of users basically have to have a good oracle to be in the DeFi game at all, in order to prove that they're meeting a certain threshold of security and verifiability. So I think that's really our goal, is to make sure that those properties of randomness for NFT generation, provision of data to prove the value of NFTs on an ongoing basis, we need to play that role well in order for the value secured to grow to a certain size.
Yeah, and just to your point about scarcity in art, I'm sure many artists heave a sigh of relief that now they don't have to be dead before their artwork, skyrockets in value. Because that's one reason why artwork goes up, right? Because it's scarce. The artist is gone. There's more work coming. Maybe just a follow-up here, Sergey. Is Chainlink working on any data feeds specifically, in the art or gaming sectors?
Yeah, we have a lot of different ones. So we even some time ago now, we had at hackathons people build something like CryptoKitties with weather, and the CryptoKitties mood would be dependent on the weather, and maybe the CryptoKitty like feels better or feels worse, and that type of thing. So even a while back, years ago, we had people successfully building these types of implementations. What we're really seeing in gaming is, firstly, the provision of randomness. So people need randomness for two or three main use cases that we're seeing. The first one is the generation of NFTs, and proving that when you participate in a system that generates NFTs, you're getting a fairly generated digital good, because people are basically generating like gold out of thin air, and anyone who participates in that, they, logically speaking, rational actor would want assurances that the good NFTs are not going to an adversary. And so the more the value pumped into NFTs grows, the more that assurance will become important. So I think VRF as an input is important. There's other categories for VRF that we've seen around ordering. So when you want to do distributions of even token sales or certain NFT distributions, fair ordering of how people get those is important from a randomness point of view. So I think randomness is actually very important in gaming and in this NFT context, in the gaming context. Otherwise, for the NFTs that are more in the collateral sphere of things, those really require all kinds of data about underlying assets, right? They require data about the value of the thing they're insuring, or the value of if it's a real estate asset and that's been tokenized, you kind of need an ongoing relationship. And once again, the fascinating thing is that I think that Jamie is right about this, that the line will really blur. You'll end up seeing a world where the NFT world ends up generating a lot of collateral in a gaming format or an art format or a real world collateral format. And all of that collateral will then flow into this DeFi ecosystem to be able to generate yields. And so the generation of that collateral for gaming, for these distributions, for the off-chain collateral will to a certain degree depend on the ability to prove things, such as that it was fairly generated, that the value of the asset is in a certain state. And so those are the categories that we're quite focused on enabling.
Yeah, no, thanks for that. And I'm just going to open this up to sort of the panel, and guys, feel free to just hop in if you have something to add. What's a good taxonomy for NFTs, right? We hear about use cases in art, for example, use cases in gaming. Are there other buckets out there that you see emerging? What's a good way to sort of map out the NFT landscape today? And I'll just open that to the panel.
Well, my opinion is it's really simpler than that. Non-fungible token. Like I actually just tweeted this before the panel. Nobody says things in real. We don't use the word non-fungible in real life, right? Most things just are non-fungible. You use the word fungible when you're talking about currencies or money or commodities or whatever. But your homes are non-fungible, your art is non-fungible, your friends are non-fungible, your data is non-fungible, your insurance is non-fungible, most debts are non-fungible. Even financial instruments in many cases are non-fungible because it matters sort of what the specific dynamics of the underlying things. Insurance is a great example that you're seeing on Ethereum already. So we haven't even scratched the surface of what sort of the non-fungible standard, so to speak, could look like. And I remember when Dieter came to me and he came up with non-fungible token. I was like, what does that even mean? That's not really a word. And we didn't really debate it too much because we assumed that it would sort of be, kind of similar to ERC20 when just people call them tokens. We assumed that this, it would In fact, non-fungible token would be the token, and then people might start saying fungible token. And so I think that the fact that that's not the case is just a sign of how early crypto is. And most people think, hey, blockchain is for money, and that's sort of it. But now that you're seeing slightly more complex applications make sense on top of Ethereum, you're already seeing sort of why NFTs in the case of year insurance and this sort of thing. So yeah, I mean, it could be art, it could be in-game assets, it could be in-game status, it could be reputation, but it could also be financial instruments that are not commodities. It matters which specific one that actually is. Niftyfy is a website where you can collateralize your NFTs, and the loans that you get, I mean, each of those are non-fungible, right? Because they're being collateralized by a specific piece of collateral, but you can buy and you can actually sell the loan itself to somebody else that wants that collateral, so their financial instruments. So I have a very kind of broad interpretation of the word NFT. We at Dapper Labs like focusing on digital assets with functionality. So we haven't done any, we've done a few sort of pure art projects. We did a digital dress, sold for $10,000 last year. We've done kind of collaborations with digital artists on Nifty Gateway and a couple more coming up. But we like focusing on the functionality aspect. So what is the NFT almost as a key to new experiences, and also as a tracker of your reputation within those experiences. Like for example, it's very simple. Even Spencer Dinwiddie opens up a pack on NBA Top Shot. He gets a Spencer Dinwiddie. Like now that's sort of the fact that event happened is tied into that asset and that individual, and sort of, what can we do? What can we do with that? So, I maybe, that's a, I have a very broad interpretation of NFT, and I think we're just scratching the surface of sort of what's possible. But
I mean, if I'm hearing you right, like NFTs is everything except where the token is money, right? So it's everything else.
Well, or a commodity, right? Like, an API key is a fungible token. It doesn't matter, which specific one you have, and maybe it matters how many you have. Maybe a governance token, right? A governance token is a fungible token. So I think it's bigger than just sort of currencies or money, but essentially currencies, commodities, and certain types of securities I see as fungible. Everything else is non-fungible.
Yeah, totally. Jamie, you look like you have something to
add. There's not really much more to build on that. I mean, I think the only other thing that's interesting, and I don't know, I wouldn't dare to say I could build on that from a taxonomy perspective. I think that pretty much nailed it. But what is interesting, it's becoming more apparent to me that Nifties in their current context are increasingly these kind of social goods, these social assets, especially when thought of as a kind of consumable, or a digital consumable. And so for me, there might become a distinction about whether this thing is a consumable or not. And if it is, where is that experience had? Is it an experience had in the physical world, or is an experience had in the virtual world or the metaverse? And so I think, if you look at some of the crazy innovation that's leveraging a lot of the programmability of these digital goods, it's actually happening in places like crypto voxels. It's happening in, Decentraland. So maybe that becomes a distinction, but that's probably the macro distinction we're going to make in life generally, is the difference between our physical and our virtual experience.
I mean, now that you mentioned some of these sort of metaverse types of environments, right? One of the amazing things with art NFTs is that I think the question is always, so how do you display them, right? You can't hang them on a wall. And the answer was, let's generate new digital worlds in which we can display this digital art. And I think, that has led to a proliferation of venues where collectors can then display their digital art that are NFT linked, which is kind of an amazing solution to the problem. Just to
maybe build on that, I think if you think about them in the context of an experience, so at the moment, most Nifties, certainly as a kind of collectible or a piece of art, they're usually made by like one creator. But increasingly, certainly the stuff that I'm buying, it is more experiential art. It's like multimedia, People are building things with gaming engines. Sergey said they might be introducing some randomness into it. So these kind of become living assets, responsive digital goods, and increasingly experiences. And so, again, I think what most excites me is not necessarily could an artist tokenize themselves, but how can these things be assets that represent a collective, a collaboration? Because I imagine increasingly you're going to have a Nifty, which is both an animation and a unique soundtrack or unique sound score. And then I'm going to experience that. That could give me access to that experience in a particular virtual room, in a particular virtual environment. And so once you go down that rabbit hole, the context of this thing takes on much more social characteristics.
Yeah, I mean, just a quick one on this thing about social characteristics. I mean, we've seen this question of like whether creators can own their platforms or own their products, right, come up more to the fore. I think most recently, one thing that really broke through was Emily Ratajkowski, the model, wrote an essay in New York Magazine, right, about these cases where in one case, a very famous fine art artist used one of her Instagram images and turned it into a piece of art that he then sold back to her. And in another case, a fashion photographer was publishing photo books of her images and selling to other people. And I think this whole conversation then sort of dovetails into this question of personal tokens or social tokens, and this notion of artists owning their work, right? And I'm just wondering if on this sort of personal tokens trend that we're seeing, is this something that any of you are following? You know, are there interesting use cases, interesting tooling that you've seen that addresses some of these issues?
I mean, I'm sure Roham can talk from a Dapper Labs perspective on a much more technical level to me, but I think looking at the provenance of memes, memetics, you know, and people being proportionately rewarded for their participation in something, these things then take the life of a social asset, social currency. So there's this whole thing called trash art, which was like trying to get my head around for ages when I came into crypto. Like, what the hell is this trash art thing? And it was because somebody got deplatformed for basically ripping off art on the internet, running it through a basic program to distorts it slightly and then selling it. And it kicked off this whole debate around, well, what is art? And that the kind of deplatforming led to this meme that I think is still going on now. It's just never ending around trash art. And so if that whole process could have been tokenized in a way, and the contributors could have benefited from participating in it, then I think that gets really interesting too.
Yeah, I'm following a lot of the personal token stuff. I love the people that are doing it, and I think that there's a lot of potential there. And you're also seeing it kind of extend from people like, hey, Alex and his token, to organizations. So an esports team having their own tokens, rewarding their fans, and then those tokens giving you access into special rooms on Discord, et cetera. You're seeing really cool experiments that are sort of driven around that. But I think fundamentally, a lot of what's going on is still experimental, because it's not. You got to think about it. Is this thing sustainable, right? And is it positive sum or zero sum? Because, you know, pumping a token and then at some point, everyone wanting to turn it into dollars, that's zero sum. That can't sustain. Whereas the thing I love about non-fungible tokens, that blend of personal tokens and non-fungible tokens hasn't happened yet, is it can be positive sum, because you can create a fungible token that then translates into a non-fungible token, and that non-fungible token, it has other purposes other than being sold, right? Its goal isn't to immediately sort of turn an APR. You're not trying to hit an average rate of return. And so because it has purpose, because then it becomes a positive sum game, which is now sustainable. So something like personal or sort of team tokens or community tokens that give access to special events, give access to special Discord rooms, whatever, those are positive sum, because those things have purpose in and of themselves, rather than their only purpose is to be sold to somebody else. That's just a Ponzi. And so it's really, I mean, these sort of frameworks don't really exist yet because there's not enough, we just don't have enough sort of evidence out there. And crypto Twitter tends to reward everything on the up and then sort of act super smart when it's on the down. It's kind of like, guys, you know, let's stop thinking in days. Let's start thinking in months and years, and actually build things that people want. So I'm like the boring old guy that's like, where's the revenue model? You know, how are you going to pay for your cost of goods? How is this going to sustain? You know, it doesn't have to sustain a multi-billion-dollar profitable whatever corporation, but it does need to sustain the creators that are actually doing it in a way that doesn't get them salty and having them rug pull on their own customers. So, you know, I think personal tokens are super cool. They're very interesting. They're very risky, and I think that, you know, some people, the problem with putting a ticker price on it is it sort of does you a disservice. On the way up, you're a genius. On the way down, you're an idiot, and that's just not fair, right? It's not reality, and it's the reason why startups used to stay private for as long as possible before kind of getting a kind of public company price on it. So I think the models are not sustainable yet, and I think that sort of equating dollar value with sort of social value is wrong. And the cool thing about NFTs is it sort of separates the two, but I think it's still very possible with fungible tokens to separate the two. It's just you need sort of stock markets that are much more about the social value of these coins rather than their sort of dollar value relative to Ether or Bitcoin or whatever, because to me, access into a particular community might be worth more than to you. And you shouldn't be able to scalp me to get in, right? Like scalping is you know, there's academic papers about how it creates deadweight loss, and it's actually inefficient to both the producer and the customer. So the whole goal of crypto is remove the middleman, not like add, you know, super sophisticated quant traders as middlemen, right? To sort of block people from getting to the value they actually want. So so I love what's happening, but I encourage everybody to sort of take a step back and think, you know, what am I trying to do here? But it's, you know, early days of social media, right? Like the first Twitter pages and the first Facebook pages, like, you know, brands didn't want to touch it because they said, I'm not going to have direct conversations with my customers. That's crazy. And you know, many brands are like, I'm not going to have a dollar value placed on my brand. That's crazy. Whereas in reality, I think what'll happen eventually is every community, whether it's you as an individual or nonprofit or a team or you know, whatever it is, you'll be able to translate some of that social value into financial value, but you have to be careful. And you know, you're managing an economy, so you have to pay attention to inflation, to velocity of money, to sort of all of these kinds of things. You know, the tools don't exist yet.
Absolutely. And full disclaimer, I have a personal token, but for anyone from the SEC watching this recording, it is absolutely useless. There's no value, you know, please don't arrest me. I wonder if we have just a few more minutes to talk about user adoption. Sergey, your team told me that Chainlink is securing over $3 billion in DeFi apps. So, you know, you certainly have a window into sort of user adoption here. I'm wondering if you see, you know, off-chain data and dynamic NFTs. Do you see that as stuff that is going to help get perhaps non-financial users excited and interested in getting onboarded into sort of the crypto world in general? You might be on mute.
Sorry. Yeah, I think what we're all trying to do here is we're kind of trying to connect reality, right? We're trying to make a world where the what's going on is very proven, very reliable, very beyond manipulation. These people with these other tokens you mentioned, like they're trying to use those systems to take ownership of some economic value that they have control over, right? And then other people want access to that economic value through these systems working properly. So I think that dynamic NFTs are a more advanced version of a lot of this stuff, where you basically start mimicking what you see in the more advanced categories in asset-backed securities, where what people actually want is they want a connection back to reality for an underlying asset's real value, right? And that's what I feel all of these systems actually do. Like what blockchains actually do and what all these other kind of smart contracts systems seek to do is they seek to create tamper-proofness and basically an immutable, definitive truth about how the world is. And then what dynamic NFTs do is they basically say, I'm going to stay updated about the world, and I'm going to put those updates into a system like a blockchain and a smart contract, and I'm going to properly prove that the underlying assets that someone is dealing with are in a current state, in a certain state. And generally speaking, what you see in the financial world is that the more you can prove the value of something, the more you can prove that something is in a certain state in a reliable way, the more that form of collateral or the more that asset starts getting used in these systems. So basically, if a piece of art gets sold at a certain valuation, then the non-fungible token should know about that, right? If a piece of real estate has some kind of addition to it or something happens there, the non-fungible asset, which is tradable, should know about that. If you have other dynamics where you basically have a change in the value of your underlying asset, what you would want is a system that reflects that. And that way, you actually make incentives for people to increase the value of that asset. So somebody can go and improve the real estate asset, or they can go and make something better somewhere because they know that that'll properly be connected with that value of the asset in the blockchain context. And it's those connections that end up making all of that activity to increase and make that asset more useful and therefore more valuable happen. And so I think creating this connection with reality is something that's a bit more advanced from the current state, right? Where we're kind of just focused on how do we generate scarcity and value, and also how do we generate tradable units of something, and how do we combine that to generate scarce tradable units. But I think where you end up is kind of where the global financial system wants to be, where you have tradable units that are also really in line on reality, right? Like the underlying thing that the unit is about can represent everything about that underlying asset in an accurate way. And yeah, so that actually expands all the things that can be turned into NFTs. And therefore, the NFT landscape kind of becomes a place where you can go to create collateral around an asset. And if then there's a large DeFi landscape that allows that collateral to be used and earn interest and essentially be purchased, then you have a very interesting market dynamic where people are generating collateral, putting it into the DeFi landscape, and creating a very good cycle between the incentives of both of those. And I think that's a cycle that should be enabled and should happen, and is really going to benefit the space and rework the space into something more advanced.
Yeah, no, that's super interesting and quite philosophical, this idea of a tether to reality. I wonder, Jamie, if you actually have thoughts on this issue of scalability and gas fees. Like when you look out at the layer 2s out there, for things like art NFTs and so on, where gas fees on mainnet might be too high, what layer 2s do you see as promising? And just so people know, we've got another 5 more minutes here. So
yeah, I mean, if you don't mind, I'm gonna pass that hot potato to Roham. But what I would like to do is answer the question that you asked Sergey, because that's more in my wheelhouse, right? So I think if you look at adoption coming into this space, and this is again a big part of the thesis that we put out. Like most people, especially when I speak to founders on the podcast that we've got, the founders of Web3, most of them actually enter the space because of a philosophical or political perspective. They've found Bitcoin, and this question of what is money has kind of triggered this interest into the space. And that's obviously only a certain subset of the population that's going to appeal to. And then to then go and buy a fungible token as a consequence of that to participate in that economic experiment, again, is a small subset of people. The interesting thing with Nifties are that people can enter the system purely because of aesthetics. Wow, I like the look of that thing that just flew past me. Or from a collecting behavior. And And the good thing with that is it is more inclusive. We're going to have a much more diverse group of people coming into the system. But then once they're in the system, they'll start to understand some of the philosophy behind Web3. And ultimately, if you think about it as this socioeconomic experiment, it's been quite narrow previously. It's been about, what is money? Can we build this bottom-up capital market? I think Nifty's, what they do is they increase the complexity of that socio-economic experiment, especially on the social part. And so I think we're going to start to get experiments that are no longer this kind of narrow, hyper yield oriented experiments that we kind of see in DeFi. So that's why I'm super excited about the space. And I think this is going to come at us a lot quicker than we think. The limiting factor is, of course, as you say, fees and scalability, but I'll let somebody else take that one.
Congrats, Roham. We still have time, so you can answer that hot potato.
Yeah, I'll be quick, because I think it's not just about fees and scalability. I really think it's user experience as well. And if your first user experience is, oh, get this wallet, connect to this L2 account, get DAI to come from this wallet into this wallet, and oh wait, you don't have DAI, turn your USDC into that. Like, it's just not cool. Like, that's not going to work. It's never going to work. It's not like it might work sometimes, or it's terrible. 4 million people came to the CryptoKitties website. We just crossed in sort of the first couple months even, and we just crossed 100,000 owners, which is by far bigger than any other NFT in terms of sort of distribution. But that funnel sucks. It's not workable. You can't build a business on that funnel. And most of the people that come through are confused. So CryptoKitties for the past few months has had credit card purchases, and we see 50% of people that come in with credit card end up funding their accounts with ETH eventually. And NBA Top Shot, you don't even need to, the word blockchain isn't mentioned anywhere on the website. And you come in super smooth. Every day in Discord, people come in, they're like, hey, is this blockchain or is this crypto? They're just sort of asking, where is the crypto part? And obviously we're going to make it more and more visible sort of over time in terms of earning and all these things. So scalability is important, but it's not enough just to say, oh, we have X TPS. There's a tremendous amount of tooling. There's a tremendous amount of payments. There's a tremendous amount of just kind of piping that needs to go into it. And whenever most of the scalability solutions out there are kind of built by people that haven't built blockchain applications themselves. And so what they are is they sort of shift all of the difficulty back to the app developer. Like, here's a tool, figure it out. And that's just not going to work. And same thing with sharding, right? Same thing with sharding. Same thing with, here's a Polkadot, set up your own chain. That's not what people want to do. People want to build their applications. They don't even want to deal with the payments infrastructure. They just want to kind of build a product, get in people's hands, and ideally have it be enough for them to pay for their families' food and rent and that kind of thing. So that's, I think, what's really needed. And I think that's what we've been trying to build, that flow. I don't think it's a sort of no one else can do it. I think people can do it, but they need to start from user experience, not from TPS or, some sort of metric of that sounds cool on paper, but fundamentally isn't actually gonna kind of yield to a positive sum outcome. So, our key metric is essentially how much revenue, real money, other people are making on top of our platform, and sort of because I think that's how this thing grows and becomes bigger than sort of zero-sum games.
Yeah, I mean, it's incredible the amount of work dApp developers are doing now just to figure out, what layer 1 or layer 2 to build on, right? Because until they figure that out, they can't really start building anything and marketing it. So they're spending a ton of just cognitive load thinking about those things. All right, I think I've been told we're out of time. So thank you to my wonderful panelists, Jamie, Roham, and Sergey. If you want, do you guys want to say where people can follow you or read more about what you guys are working on? Jamie, we'll start with you.
Yeah, sure. So on Twitter, it's Jamie 247, the numbers. That's it. Outlier Ventures is outlierventures.io. Shameless plug, we are recruiting for our next accelerator cohorts, outlierventures.io/basecamp. If you're an exciting pre-seed or early stage seed startup in DeFi or NFTs, apply now.
Roham.
Awesome. Yeah, thank you. Twitter, I'm just Roham G. My DMs are open for the next few days at least. So just hit me up. Email is roham@me.com.
Sergey.
Yep. So I think the best place is chain.link, and then at it's Twitter. At Twitter, it's Chainlink, and then I'm at Sergey Nazarov. If you're building a decentralized application, you need any kind of data, you need randomness, you need any interaction with an external system to either get data or to trigger something to happen in an external system as well. We're here to support you, and you basically get a lot of resources to build something world class and even reviewed by us. So I encourage you to talk to us. We're here to support you to build something great.
Wonderful. And I'm on @Juun on Twitter. I also help out with a personal token accelerator called Seed Club. That's at Seed Club HQ if anybody out there is a creator and wants to do experiments in that space. Thank you very much. And thanks to the team, Adrian, Wele, and Chiara.
Awesome. Thank you, everybody, for joining.
Bye.
Great to see you guys. Thank you for having me. Have a good one. Bye-bye.
Great to see you as well. Thank you, Jen.